true. Samir Arora, your turn now.
Raise expectations too much. No. My question is, when I look at the different schemes of the government, it doesn't seem to have any consistent philosophy or principles behind it. So, for example, we obviously are happy.
I'm sorry, Samir. I'll have to interrupt you.
But I have to give examples.
I'll have to interrupt you right there because I can't allow you to.
I'll have to
allow you to get away with that.
I'll have to give you examples. First, I'll give you a few examples.
First, let me tell you the philosophy and the principles that we follow, and maybe that will require you not even to bring up your examples. Or do you want to do your examples?
No, I think examples will put it in perspective, because I'm not talking a very wide this thing. But for example, we recently hiked diesel prices and said they should be market determined. But a few weeks ago, we said that regional tickets should be capped. In fact, a few months ago, SEBI said that these poor guys should be paid less. Now, this is not market determined. Yesterday or today, we said that government should sell strategic stakes and even in hotels or whatever other companies, and you want to bring back the divestment department. But we have been hesitant to even say that we want to sell Suti shares. A few days ago, we say that we don't want to subsidize, let's say, R&D of pharma companies via tax concessions. But a few days ago, we said, let's say, for example, that regional airlines need to be subsidized. These are all not consistent with each other. That you have chosen that R&D and pharma cannot be subsidized, but airline at a regional level needs to be subsidized. There's no common market or philosophy behind these things, I think.
I would not agree with that, Samir. My statement would be that if you look at our economic philosophy, the Honorable Prime Minister, the Honorable Finance Minister has spoken about it many times, and they've been very clear. What we are doing is a supply-side approach to the economy. It's investment-driven growth. We are building India's productive capacity. This includes the hard assets, which is power plants, factories, roads, bridges, ports, and India's soft assets, which includes the skills and employability of our people. It includes our regulatory institutions, and it also includes our innovation ecosystem. So we are building India's productive capacity. We are strengthening India's production base so that we can sustain high growth for long periods of time rather than getting into supply-side bottlenecks, which then result in a boom-bust cycle. So that economic philosophy is very clear. In terms of our economic principles, we've laid those out also very clearly right on from the manifesto that we put out in 2014 and so on. We've said that first and foremost, we are a pro-poor government, because obviously, making sure that India's poor, deprived and destitute get a better quality of life is our moral responsibility. And because we are a pro-poor government, we have to be a pro-market government. We have to get market forces to work properly, and it has to be within the context of a well-regulated competitive environment. Number 3, we've said that we believe in empowerment, not in entitlement. Number 4, we have said that we believe in minimum government, maximum governance, that is a rules-based, non-discretionary government policy-making framework. And then finally, we believe in cooperative federalism. So this economic philosophy has been shared many times, spoken about many times. Now, of course, you can take specific instances. You can take, for example, civil aviation example and say, why are you subsidizing regional carriers? Or you can take another example and say, in this particular instance, the compensation for mutual fund managers, why is that not a pro-market measure? And we can get into each of those, in great detail. But you have to remember that when you take policy making into account, you have to balance out regulation and the functioning of a competitive market with just letting an unfettered market work. So that balance between, what is required to have a well-regulated market and just letting pure market forces work is where all the judgment in policy making comes in. Now, you may disagree with the judgment. You may disagree with specific instances, but as far as our overall philosophy is concerned, I think that's crystal clear.
The smile on Samir's face tells me he can continue this conversation with you, but I'm going to move on to Naren. Naren, your next question.
I think post the pay commission recommendations, there's been a lot of worry on fiscal deficit for the next year, that the entire benefit of the 50 bips rate cut seems to disappear in the fixed income market. Any view on this?
In our medium-term fiscal planning, we took into account our best guess for what the 7th Pay Commission would do. And so the fiscal consolidation roadmap that we laid out, 3.9% to 3.5% and then 3%, took into account what we thought the impact of the 7th Pay Commission would be and one rank, one pension. So we believe that we do have the fiscal space to be able to absorb this while still being able to stay on our fiscal consolidation roadmap.
Before we close this out, Mr. Sinha, let me ask you this, because we are in the midst of the winter session and, we obsess about the GST. But in terms of other economic legislative action, I know the bankruptcy code has to go through the Lok Sabha before it actually gets to the Rajya Sabha. In terms of economic legislation, what can we realistically expect in whatever is remaining now in under 15 days for the winter session?
Well, obviously we have the Negotiable Instruments Act, which has been tabled in the Rajya Sabha. It's already been passed in the Lok Sabha. So we have to pass it in the Rajya Sabha now. There's an ordinance in effect, so we do need to convert that into law. Then we have the amendment to the RBI Act, which all of you as investors will agree is also a landmark legislation when we are going to put in place the Monetary Policy Committee and of course the understanding on the monetary policy framework as well. So that also is scheduled for this session. So we have very important economic legislation. Of course the real estate regulation bill is there as well. All of this hopefully we should get through during the winter session.
And my final question to you, Jayant Sinha, former fund manager to now Minister of State for Finance. How has life really changed for you? And now when you have a conversation with Samir, Naren, Nilesh and Sunil, do you feel differently about how to address their issues?
No, it just gives me an opportunity to be able to serve the nation and to serve all of you even better, because I do have some understanding of these issues, and I feel like I'm quite approachable to all of you, since most of you are old friends, and as people who've known me for many years will tell you that I listen well, and whatever makes sense and whatever is in the national interest is action that we take as quickly as we possibly can. And in fact, if you look at some of the things we've done, for example, the manner in which we've dealt with AIFs and InvITs and REITs, what we're doing as far as permanent establishment is concerned, the level playing field we want to create for all investment products, all those kinds of actions I think demonstrate that the domain expertise, the industry knowledge I have is now being put to good use to solve a number of issues that have been pending, and I for one have been dealing with permanent establishment for decades now, and we are getting those resolved. I think the industry should be very pleased with all that.
Well, Jayant Sinha, appreciate you joining us here on the CNBC TV 18 special. Thank you very much for your time, and my many thanks to my co-anchors this evening for doing a fabulous job of asking the questions. Sunil, Nilesh, Samir and Naren, thank you very much.